Anna Botin, thank you so much for speaking to Bloomberg. You have a very solid set of results. You worked on capital, you worked on revenue. What is the one thing that you wish that you'll have control over in the next 12 months?
Look, so the results, 8.3 billion underlying profit, that I think once again shows the strength and resilience of our model. But very importantly, we're delivering against all our strategic goals. As you said, growth, top line growth of 49 billion euros, which is up 3% again. Growing loyal customers, so it's doing it in the right way, but with profitability at 11.8%, which is very good. And finally, on 0.65 CET1, which is a level where I'm very comfortable. We're very comfortable, not just with the level, but with the buffers against the regulatory requirements. So I'd say it's a really, really strong set of results, and very proud of the team.
A lot of investors keep on asking about capital. Do you think that will placate the critics on capital?
Well, it's a level where we're very confident that we are in a good place, not just the level, but the buffers. And I think that the best indication is that this year we've generated 97 basis points of capital gross. Because we had more than 60 basis points of regulatory requirements, it means we've ended up at 11.65. But if you look at what this allows us, the profitability in the model, I've always spoken about the transformation of the model. So, we are proposing today, we're announcing an increase again in the cash dividend per share. In the last 5 years, we've more than doubled the cash dividend per share. And I think this is really important. Generating 97 basis points of capital shows the model is working, the transformation, the execution. And again, it allows us to keep growth because we've also grown, not just revenues, we've grown the balance sheet and keep an attractive dividend policy. So we're very, very happy.
But it's not an easy landscape. So you have negative rates in Europe, you have geopolitical concerns, you have concerns on the markets. Can you continue growing at this rate, or at some point will you have to look at acquisitions?
Again, you go back to the basics, go back to our model. So our model is very simple, hasn't changed. We are focused on customers, we have the scale, and we have the geographic diversification. And what this means is that across our 3 regions, if you look at Latin America, again, 21% return on tangible equity, 37% of our earnings, only 15% of our loans, means a lot of upside. You look at Europe, negative rates. Underlying return on tangible equity for Europe as a whole, 10%, which is above the cost of equity. So good job in Europe building what I call a One Europe platform. And North America has done incredibly well, keeping the momentum. That's how I describe it. For the 3rd year in a row, US is one of our best, if not the best performing region, growing profits at 24%. So all in all, it's working, and it's working across all our regions and businesses.
So you're happy with the US? There's no thought of scaling back because you have it now where you want it to be?
US has done an exceptional work over the last few years, not just in fixing some of the legacy issues, but also in actually doing really well. And the US is really 3 blocks. One, which is the consumer lender, which has scale. That's at 13 to 15% return on tangible, with a lot of excess capital, by the way. Generating 1 million new car loans a year. Collaborating with the bank, because SBNA, which is where we're going to focus now, there's more work to do on SBNA. But today, 10% of the loans in SBNA are prime auto loans originated by Santander Consumer. And finally, we have a very interesting business, which is really, really interesting and growing a lot, of wealth management with 25 billion under management. But what's important is the profitability keeps going up, and I'm very confident we can deliver the returns that we said and we committed to in Investor Day.
So how much will you expand in the US? Is it about pouring money, or is it strategically looking at when you see opportunity?
So the last block in our strategy, and we said this last year at Investor Day, is reallocating capital to the more interesting markets. And again, if you look at our results, we're being super consistent. So where we're growing risk-weighted assets is mostly in South America, number 2 in North America, including the US, and number 3 in Europe. It's more about profitability and building a One Europe platform. In North America, including the US and Mexico, it's about growth. And, the returns there are 13, 14% if you take both countries. And leveraging the scale in Mexico, which we also have some really good numbers where Mexico, US are working together, that's going to be one of the key goals for this year.
Going back to Europe, so you say you have a very resilient model, but can you take more negative rates if it were to do that? Or even if negative rates were to stand where they are, What does it mean for Santander?
Look, if 5 years ago you told me we would be where we are, with rates being at plus 0.5 5 years ago, today they're minus 0.4. If you do the math, I mean, that's a huge change. The fact that Santander, and again, it goes back to the scale, the management, the strategy, that we can run Europe as a whole, some a bit better, some a bit worse, at 10% underlying return on tangible, 53% cost income. And we're going to do better. You know, we've committed to do better. The cost savings we've achieved this year in Europe are going to increase next year. We're planning to do at least double. We committed 1.2 billion of cost savings. And it's all about the customer experience. And so, for example, the UK, I'm sure you're going to ask me about the UK.
I will.
So maybe I should ask you about the UK now. But there's always in our model a country that's doing, you know, more than others, and that's exactly why the model is so sustainable and predictable through the cycle. But we're doing well in Europe, given the situation.
Is there anything that banks and Santander can do to protect yourself from negative rates apart from cost cutting?
So I've said this publicly. I think the ECB and the Mario Draghi did an amazing job. They basically saved the euro. I think what's important now is to look from here onwards and look at the pluses and minuses in a really objective way. And I always say I don't have all the numbers of the ECB. I'm not sure what they're looking at. I can guess, but you know, none of us actually see it. I think the negatives outweigh the positives. You know, there is all sorts of issues like moral hazard, social problems. How can I charge people for the savings when most of the savings is small savers? You know, what does it mean for inequality? What does it mean when the ones that have more savings can actually invest in equities and others, which the others cannot? And so there's all sorts of issues. But the most important one is transmission of monetary policy. So, you know, I'm not going to give you a lesson in this, but if you take what they're trying to do, you know, is basically you lower rates, there's more demand for credit. But it's not working. As a matter of fact, actually, in a lot of countries, loans are coming down.
But the ECB is aware of this? Do you think they'll put on extra tiering?
The tiering for us is a zero-sum game. It's not helping us. And so I think what's very important, it's been announced basically a review of the policy, and they're going to try and understand exactly what we're talking about. And at the end, I always say, make decisions based on facts and numbers. And but it's not just about rates. I mean, for us, we have a strong model, we have the scale. And again, it's making us so much better as a company. And might I say, and I know you were in Davos, but you know, we've been very keen to run Santander as a responsible bank. And we're very proud we've been voted the most sustainable bank in the world by one of the leading companies.
So let me ask about the UK and then sustainability. If you look at the UK, so it's taken like 2 prime ministers 36 months for the UK to leave the EU. Now they renegotiate the trade deal. What would you ask of them to make sure that Santander UK keeps on doing good?
So my favorite sentence, yeah, I'm sure I've told you this already, we're the most British of the British banks. So we will do as well as the British economy as long as we manage well, which I believe we do. So for us, it's about how strong the economy is. And obviously, it's been softening. When there's uncertainty, people invest less. You know, if you're going to buy a house, you wait and see what happens. And so the key is confidence. I think now we have some certainty it's going to happen. We now need to know how it's going to happen. But what I can tell you is for Santander customers, we have 15 million customers across the UK, active customers, and a total of 25. And so, you know, we are very keen, and we've done a lot of work to make sure our customers actually have a seamless service, whatever happens with Brexit, and that's where we are today.
So regardless of what happens with regulation, you feel like you're in a strong position in the UK?
We've done a lot of work in the UK. We're the 3rd largest mortgage lender in the UK. We've had our strongest mortgage year ever. And, you know, we've done a huge amount of work on current accounts, for example. People forget that we multiplied by 5 our current accounts. And that's a huge priority because that's really what makes you be a Santander customer. That's the definition of a loyal customer. Santander UK has 4.7 million loyal customers. That's almost 25% of the total for the group. So it's a huge value to us having this very strong franchise in the UK, and we're very excited about the work that we've done. and the opportunities ahead.
On sustainability, so you've worked a lot on carbon neutrality.
Yes.
Will something change in the investments that you actually put in place to either not invest in companies that generate fossil fuel or anything like that, like the asset managers have?
So as important, and as you know, I was in Greenland this summer to showcase, I think it's super important we are all conscious that this is an emergency for the world. But you and I, Europe, we're not going to fix it alone. So first thing I might say is governments need to get together and do it for all of us. Second, of course, as private sector, we can do something. And you and I, can stop. I eat meat once a day or animal protein. That helps. But as a company and especially as a bank, we need to do more. So what we have been working on this for 15 years. And so what we committed a few months ago is carbon neutrality for us. But the key issue for all of us is that it's done responsibly. We do not leave people behind, There's a lot of people, billions of middle-class citizens, but there's billions that are not middle-class that want to live better. And so we need to ensure that, for example, Poland, 80% of the energy in Poland is coal. We have a big bank in Poland. So what have we done? We've said we're not financing new coal-fired plants. We're not financing new customers that are going to that already have coal-fired plants. But we need to continue financing the existing ones because otherwise there would be no energy in Poland. And so my big concern is that we do not forget this. So it's emerging markets that are different. And second, that we need to help companies transform. And that's what we're working on.
I know we're running out of time, but on Podemos, so they're now in government, do you worry about extra taxes for the financial sector, given that they've blamed the banks for the financial crisis?
We work with governments across the world, and we're looking forward to working with the Spanish government. And I think what's important is that Santander pays an effective tax rate of 35%. So we're very keen that the tax system, competition, regulation is fair for all of us. So we all should be paying taxes where we create value. So this is one of the big topics. And at the end of the day, taxes have to create social justice for all companies the same way. And it's important that they get more income so we can finance the social programs. And so we're going to be working with them and other governments to make sure that if there's anything we can do to help. But, again, everybody should pay their fair share.
I know you have a little exposure to Asia, but how much of a nightmare is it for, when you run a big global bank to have something like the coronavirus?
Well, we actually discussed this at the risk committee yesterday, and what we do have people in Asia. So we need to make sure people understand the do's and don'ts. And so, we are making recommendations on travel. We've taken out the people in China and in Asia. We're making sure, the most important thing I'm told is to take your temperature. So make sure if you know anybody who's been in the region, if there's any sign that your temperature is going up, you should actually go to a hospital or get advice.